I'm Gaurav at Garden Talk Club, and you are at the right place to know more about the buzz of a major investment bank is on the brink. Now, if you're new to this channel, I'm so glad you are here. My name is Gaurav, and I discuss on interesting topics. So if this interests you, consider subscribing to new content on my channel and ring the bell to get notified when new videos post. So today's video is about the major investment bank which is on the brink. Majority of the news channels, social media is buzzing up with it. This is how it is today. Which is the investment bank? Is it a big one? Yes, you're getting it correct. It's Credit Suisse Bank. Let's start what we are getting from various sources around the globe, plus the official versions. Officially, CFO, CEO are giving out statements quick enough. The Credit Suisse CEO just said it's a critical moment. ABC Australia is reporting that a major investment bank is on the brink. Currently, no names mentioned. Major social news platforms are having pointers to these questions. Credit Suisse is probably bankrupt, if I may say. Let's start. The collapse of Credit Suisse share price is of great concern. The stock price has gone from $14.9 in Feb 2021 to 3.9 currently. And with a ratio of P by which is 0.22, and what markets are saying that it is insolvent, probably bust. It is a case of systematic risk of that bank. The collapse in Credit Suisse share price is of great concern. From $14.9 in Feb 2021 to 3.9 currently. Markets are saying it's insolvent and probably bust. Credit Suisse has been on a downhill roll, going bankrupt since when? Ages at least, I think. From 2008, its share price is going down. Every time there's a news, but nothing fair happens. It's not the same thing right now because of the changes in requirements. These changes the scenario currently. There is an international committee called Basel, which drafts the standard for regulating the banks, which is also based right here in Switzerland. It's a common knowledge now for this Basel request. After 2008, they revised the standards to include few things. One, they increased capital requirements. Two, restrict the risky investing. Now, that is what the main concern is. Where we have the headquarters for Credit Suisse, Switzerland, Basel only. Now, some numbers that they stand at. The four key numbers: $160 billion in cash, $400 billion in liabilities, $900 billion leverage exposure, $40 billion in equity. These are big, but that's the size of this bank. It translates to around $200 billion in assets, $1.3 trillion in liabilities. Can you sunk that bank? Probably no. They have more than $1.1 trillion. They can't cover. That's a pinch. Credit Suisse has been on the skid for the better part of the decade. Yet I'll find it surprising to see once a prominent investment bank drop by more than 10% intraday. That's an alarm. Will it pull off the nosedive this time? Does the market care either way? Almost 1 trillion leverage is a long exposure. It is considered one of 9 systematically important banks in EU. Same as bracket as say JP Morgan or UBS. Also, nothing can happen to it. Say at worst, UPS will scoop it, governments will have help tide over. But it is not in the same brackets as JPM and the other 9 g-sibs. The another side I think tells us most what we need to know. One force, FRAOIS, blowing out. This has the following movement in the last 5 years, which doesn't look good. Clarity on FRAOIS. It's the spread that measures the difference between 3-month LIBOR or the bank lending rate and the overnight index rate or effective Fed funds rate. This is very key. The widening of this spread, as seen by many as proxy for the risk in the banking. Basically, a funding stress is the indicator here because of all this, which is the key. Spread drivers are credit and risk, default, counterparty risk, market volatility, and liquid risk. One force just means 3 months loan that is beginning in a month. Also, the think issue is sector wide with FRAOS spread going higher. 10 billion bank with 800 billion in assets. That's the size of UBS. Recall in 2006 or so, they made a 2 billion profit from swaps. That was crazy profit. How could that happen to a Swiss bank? That's a thought for all of us. So are credit default swaps the contagion to the entire financial system? And that can be huge. As many are times when we have seen when a large financial institution's share price goes below $5, they either go bankrupt or they have to be bailed out. That's to be remembered. Earlier I had mentioned the P by V ratio is 0.22. Never saw something like this at this scale. Can somebody enlighten me? Is this just saying that actual book value is 75% less valuable than it is reported? Or they are discounting the possibility of insolvency? If so, is there a way to quantify it? The PB ratio is meaningless unless the assets can be monetized at the face value. Another quick question for the viewers. Can someone tell me what type of bonds Credit Suisse holds and what's the percentage holding they hold? That information is not public. Now, when PV goes to 0.3x or lower, the market is basically saying their balance sheet is toast. Zero confidence. The pre-GFC, that was a level that triggered immediate failures. In 2008, Lehman Brothers, 2022, Credit Suisse. Credit Suisse share price, the 1st of Jan 2022 was around $9. Now it is 3.9 CHF. See, it is still controlled falls in 2007, but it has reached 3.5. Under 3.5, an intervention will be required. Now, it is not the only one bank that is there. There are other banks also close by, like Deutsche Bank also is close. Both Credit Suisse and Deutsche are designated as systematically important financial institution, SIFI. That is, they are too big to fail by the governments or everybody else. Another important aspect, default insurance, that CDS on Credit Suisse is approaching the same level as during the collapse of Lehman. Everything gets a reference. In 2011-12, Morgan Stanley CDS was twice as wide. Credit Suisse is today. See, another question to the viewers. What major banks are exposed to Credit Suisse? A key fact, they will be saved by whom? Say the Swiss government or, as usual, UBS if somebody comes in. They would be fusioned with UBS. We'll have to see over the, say, week or so. Quickly again, whoever has access to Bloomberg platform can see more insights. There are more banks and companies about to lose their money. Monday would be very important. The credit market have a huge risk premium on them. They don't believe they are good risk also. Equity markets follow credit market. If the bonds are at the risk, equity is really toast. Yes, $1,500 billion under management, 50,000 employees worldwide, approximate. This is a big fish, but the net enterprise value is way bigger at 40 billion, at 10 billion valuation. That's big in compared to its peers. It would be a disaster for Switzerland, for UBS. They are too big, massive institutions, but they are too big also to bail out. Scary stuff, especially when you think about all of the EU banks, which was forced by EU governments at negative rates. It's just mind-boggling. So this was a CS story as develops. what it is. Be sure to like and subscribe my channel for updates. I'll get more updates on this also. It's a great motivation to this topic plus host of other topics. Do let me know your thoughts in comments below, and thank you for following this video till the end.